As the Bitcoin price continues to go up into new yearly highs, there are some glaring issues with the on-chain data and some of those bearish situations that look to be unfolding on the macro level time frame. In today's video, we're going to be jumping down into the charts for the technical analysis, but also the online data or on-chain data for Bitcoin, reviewing what I think is going on here for BTC. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at 𝗕𝗘𝗪𝗏. And if you haven't yet joined us in Discord, what are you waiting for? Check it out. Link is in the description down below. Let's roll that intro and get right down into it. Okay, guys, let's jump right down into the charts for technical analysis to start with, and then we'll jump over into the world of on-chain data. So here we have Bitcoin paired up with US dollar. This is the 1 week time frame, and Bitstamp is the data source. Now, in here, we have got a lot of data that's been kind of reviewed over the last 2 or so years, kind of taking a look at the previous kind of bull markets, bear markets. There's a lot of pieces of information on here. The green lines coming down here, the vertical ones, these are the Bitcoin halving events. We've spoken about this quite a few times already, but in here we can see that the Bitcoin halving events are never really a catalyst for bullish markets, but they happen to coincide with the bullish market in itself. For example, you can see that there's usually good growth before the Bitcoin halving events over here and here, for example, and kind of where we are right now. Ultimately, the Bitcoin halving event isn't the catalyst for anything, but it does obviously create a little bit more FOMO, creates a little bit more eyeballs on BTC and things like that. We can see that on a couple of occasions here, we've actually had a decrease in price on the Bitcoin halving event, a little bit of stagnation there. And so when we have this next one in 2024, we'll probably see the same that's happened time and time again, which is just, it's a nothing burger. Essentially, it doesn't really mean anything. And the price action is very stagnant. It doesn't do anything until, of course, you get some more eyeballs on the market. There's obviously lots of hype that builds up towards it, but ultimately that's what they are. Then, of course, we've kind of got the retracements in the previous bear markets. These are quite interesting. And if the bottom is in for Bitcoin, it is the weakest bear market in BTC history, which means it's something new for Bitcoin. Again, this isn't anything unusual because we've got a lot of new things when it comes to Bitcoin. And we have the weakest bear market in Bitcoin history at only a 77% drop versus that of the previous bear market at 84%, and the time before that was 86%. And so we have to acknowledge that things are getting weaker and weaker. So a really weak bull market, a really weak bull market, and a really weak bear market, right? We had 2,000% in gains to the upside, a 77% crash. Before that, it was 12,000% up and an 84% crash. Before that, it was 51,000% up and 86% down. And so, yeah, we'll probably only really push up maybe 1,000% from the bottom. So if we are to see the rate of decrease and decline and the way that we have been, then yeah, we're probably only really going to be talking around that 1,000% or so. And that's going to put us at around $170,000. So pretty sizable amount in terms of Bitcoin there, in terms of the value of it, but it's only 1,000%, and altcoins are always going to drive you more than Bitcoin is. That being said, it's a safer play ultimately. If you think about all these high-risk assets, cryptocurrency investments, Bitcoin is the safer one out of all the high-risk assets. So a safer high-risk play. That being said, though, it's an interesting one to kind of see how this thing does play out. I still see 110 kind of being where we tap out for now, but I do think it's going to be interesting to see where it does play out across the longer play or the longer term. So yeah, if the bottom is in for Bitcoin, it is a new variable for Bitcoin. It is the lowest or the weakest bear market in Bitcoin history. The other things that are new here is obviously we had 3-wave corrections in our 2015 bear market low or 2014 bear market. We then obviously have the 2018 bear market also being a 3-wave pattern. And then we have a 5-wave WXY/XZ structure for our current bear market at the 77%. So we know that we've got things very different in this particular cycle or this bear market that we've just been through than we have in the previous two. We also, for the first time in Bitcoin's history, went down lower than the previous all-time high. So we know that's a different variable. We also retraced deeper than 1.382 on the fib scale, whereas before we stayed above the 1.236. So my point here is that there's a lot of things that have happened differently in this particular bear market than we had seen previously. And to expect kind of very similar results to what we saw previously in terms of the exit, I think, or the exit from that bear market into a bull market, I think to expect the same as what happened before would be very foolish, because we're coming from a totally different foundation. We're coming from a totally different set of variables. So we can't expect the same result as what we saw previously. That's kind of one of the main points I think we really need to understand as retail investors, because we all look at history and we think, oh, history is going to repeat itself. It's going to be great. But unfortunately, that doesn't always happen. And then, of course, we've got the capitulation. Capitulation is a retracement of significance, but yet not a new lower low. Okay, so not a new bear market low, but capitulation. For example, as you can kind of see just over this side right here, this is the bear market low of 2018, and then you had your capitulation, which is your second move to the downside, but not a new bear market low point, which happened in 2020. And again, if you go back a little bit earlier, you can see your first bear market low of 2014, and then you see a capitulation event just here in 2015. Okay, where we are right now in terms of our Bitcoin price for 2023, and we have the bear market low point down here at the end of 2022, but we haven't yet had a capitulation event to come and bring us down, not into a new bear market low, but into an area where we see consolidation of wallets. We see basically retail investors selling to whales, those kind of things. They haven't happened yet, which brings me on to, guys, that on-chain data, which if I load up here, by the way, guys, this is our website, which is basically membership.𝗕𝗘𝗪𝗏.io. Link is in the description below. On that website for members, we have a data zone and a data portal. In the data portal, we have the on-chain metrics. So I'll just start at the overview, because I do think this is quite important. We have obviously the all-time high, the date of the all-time high, the percent that we're down from there, the number of days since our all-time high. The circulating supply is 19.5 million Bitcoin out of the 21 million. That essentially means there is now less than 1.5 million Bitcoin left to be mined. Really important, because the Bitcoin halving event basically about halving the amount of Bitcoin that can be mined, but that only affects the 1.5 million that is left to be mined. It does not affect, the actual amount of Bitcoin that we have to that's actually out in circulating supply. It's really important that we understand that the halving event only affects what hasn't been mined yet. And so when we kind of take a look at our data to know that we've got 19.565 million out there, out of the 21, we've got less than 1.5 million to be mined. The halving event only affects what hasn't been mined. The circulating supply isn't going to be affected by the halving event. Very important that we understand that. Out of all of the addresses, there's 51.1 million Bitcoin addresses out there. That's a really big number, but I'm going to show you why that is really not a good metric for Bitcoin right now. We can see here that we have active addresses of 927,000. Active addresses that have basically received Bitcoin is 736,000, with 599,000 sending it. Now, when we take a look at the wallets, this is the part that's really interesting. We have retail investors, which are basically all of these top level wallets that you see on the screen here. 0.001 all the way up to 10 Bitcoin, right? These are retail investors at different levels. You've got your real kind of 9 to 5 kind of workers, then you've kind of got your high net worth individuals with 10 Bitcoin or more. And when you take a look at these are all on the up, they're all on the increase. As you can see over this side here on the right hand side, you can see the percentage that they're up in the last year, for example, 365 days, 11.94% up on wallets that contain 0.01 Bitcoin or more, right? And if you take a look at it on the real small side, it's up 13.56% in the last 365 days. Now, what I want to point out here, guys, is the Bitcoin that has wallets, the number of wallets that have more than 0.001 Bitcoin is 24 million. That is less than half of what you see here from the total addresses. That means that over half of the addresses in Bitcoin's land, in Bitcoin's ledger, there's nothing in them. They're empty. They're pointless wallets, right? And if we take a look at this even further, we can say having greater than 0.001 really isn't going to be that impactful either. That's just dust. Those are potentially dead wallets as well. What about just 1% of a Bitcoin? How many wallets have just 1% of Bitcoin? 12.5 million. That means that there's even less, right, actually wallets that have 1% of Bitcoin than the 51 million. So we know that the 51 million is kind of like a bit of a smokescreen. It's kind of giving you the idea that there's wallet growth there, but they're not actually active wallets. And a lot of them are just empty. They're not really doing anything. And really important that we understand that. So 1% of Bitcoin sits here at 12.5 million. What about 10% of a Bitcoin? 10% of a Bitcoin is 4.5 million. Okay. And so at this point here, we're talking about what? $4,000 approximately for $4,300 of Bitcoin. So, for 10% of a Bitcoin. So yeah, that's a pretty sizable investment. That's a retail investment. That to me seems like an area that, you kind of want to be aiming for. So realistically speaking, having 1% of a Bitcoin, having $400 invested in BTC versus having $4,000 in Bitcoin, you can see that there's a bit of a difference there of around 8 million wallets, right? So we know that there really isn't a lot of investors who have substantial amounts of money invested, and definitely not the 51 million wallets that we see. As we scale up even further, there's only 1 million wallets that have one Bitcoin or more. That's $40,000 or $43,000, $44,000 worth of Bitcoin invested, right? And so here we can see all of these low-end wallets are up over the last 365 days, 6.19%. As you can kind of see, a little bit of selling pressure right now, not to be kind of, unheard of considering the amount of price action that we've seen. And I do think that these are the most vulnerable investors up at this kind of higher range. Now, as we get into the high net worth individuals, 10 Bitcoin or more, well, you're starting to see a turn. You're starting to see profits getting taken by the high net worth individuals as they've rallied up quite nicely at this point. So they are starting to decrease. And what's really interesting about this is you've got your real kind of low end retail investors who believe thoroughly that, Bitcoin's going to $100,000, real soon. It's just around the corner. Nothing's going to stop it. Versus the high net worth individuals and larger investors that realize that, actually they've made really good money over what they've invested, and they might as well start taking some profit. And that's kind of what you're seeing here. As you can see, that everything balances out, right? There's always a buyer, there's always a seller. And so when we see all of these in positive numbers, right, on all the low side is all positive numbers, and we start going up into the higher side wallets and the bigger, larger investors, and they're all the negatives, it tells us a very clear picture that there's transfers of wealth happening here between the lower end retail investor and the higher end retail investor, in the sense that larger investors are offloading their Bitcoin into this move to the upside. Take a look at the 100 Bitcoin or more. Again, these are just traders. They just go sideways because they don't really have a lot of interest in kind of holding for long term. So they're always in and out of their positions. And this hasn't really changed massively over a very significant period of time. Obviously, in the very early days, it was quite easy to get 100 Bitcoin or more. So it really did see some skyrockets up towards, early 2017. After that, though, they saw lots of profits getting taken during the bullish market of 2017 into 2018, and then it just becomes very stagnant ever since. And so not a lot of activity on the 100 Bitcoin or more. I call them traders because they're just in and out of their positions all the time. From a 1,000 Bitcoin point of view, you can see here that it's actually quite flat across the last year. Not a lot of activity. Even though price has been pushing up, they're not buying into it. The wallet counts are still lower today than they were pre-FTX crash, which basically tells you that they're not really interested. There isn't really an appetite for large investors to come into Bitcoin. Even though price has moved up the way that it has done, the number of whales that have at least 1,000 Bitcoin is lower today than it was in November. It was lower than November 2022 at that point, and lower than October of 2022. So we know that there isn't really an appetite. We see some fluctuations, we sure do. If I zoom in here, you can kind of see we can see how kind of stagnant this becomes, but there are some fluctuations in there. We are moving up a few wallets here and a few wallets there. But 365 days ago, there were 2,042 wallets, or 2,042 whales. Today, there are 2,027 whales. So we know that the appetite for larger investors to come into Bitcoin just isn't there yet. I think they're waiting for Bitcoin spot ETF stuff. And ultimately, I think they're just waiting on the inevitable, which will be cheaper Bitcoin. There's no point in paying 40K when we can all see within the data that we're expecting 30K, potentially even lower than that. So as we kind of take a look at the larger size whale, or wallets, this is really where the areas of concern come in. Let me zoom in so you can see this and understand this, because this is a really important thing to understand, because a lot of retail investors do not look at the data. They do not follow the money. And if you are to follow the money, this next chart is very, very important in understanding where the Bitcoin is coming from for retail investors to be buying. Okay, so let's go into this. Here we have 10,000 Bitcoin or more per wallet. There are 105 of these wallets. A year ago, there were 116 wallets that had over 10,000 Bitcoin. You can see that during this entire move in 2023 to the upside, these guys have been offloading their Bitcoin. Basically, the people who have been buying in 2023 have been buying from these larger investors, the 1,000 Bitcoin or more or 10,000 Bitcoin or more wallet sizes, the larger institutional level investors. And you can see there isn't a positive number on our chart here. Okay, this shows you the last 1 day. Okay, it's down 0.94%. The last 7 days, 1.87%. In the last 14 days, 2.78%. In the last 30 days, the number of wallets that have over 10,000 Bitcoin in them is down 5.41%. 60 days, 1.87. 90 days, 1.87. 180 days ago, they are down 7.89% and 9.48% last year. So we know that there's been a lot of selling pressure, or a lot of selling into the move to the upside. Lots of transfers are happening here. Okay, large wallet holders owning more than 10,000 Bitcoin or more are down nearly 10% in the last year. This tells you that they aren't back in the move to the upside. If they believed that Bitcoin was going to $100,000, why on earth are they selling at $35,000, right? And so we have to understand that it's hard to sell large amounts of Bitcoin. It takes some time to move large amounts of Bitcoin onto exchanges and to kind of liquidate it, right? That being said, number of Bitcoin wallets that are decreasing is rapidly occurring. And again, there's going to be people out there that will like to think that maybe they're just, reducing their risk. Maybe they're opening up 10 wallets, right? They're opening up 10 wallets to kind of hide their 10,000 Bitcoin. Well, if that were the case, we would see an increase with the 1,000 Bitcoin wallets, which we don't see, right? So if we were to see a huge decrease of around 10% on the larger 10,000 Bitcoin wallets, so then, they're all going to be splitting their wallets down into smaller wallets, and we would see a bump in the number of wallets that had 1,000 Bitcoin or more. Maybe they're going down to 100. Maybe they're going to split their wallets down to have that many. I just don't believe that is something happening. We don't see it in the data. And ultimately, realistically, what's going on here is that the number of wallets that own that amount of Bitcoin, they are genuinely decreasing. You have to think about why they're decreasing. Everything has to balance out as well, right? Chances are they are selling. They're selling it directly to the retail investors who are buying, which are all of those really low-end wallets that have been increasing quite rapidly. And ultimately, that's where I think the Bitcoin is heading. There's a substantial amount of BTC actually held at the retail layer. Essentially, about 3.5 million BTC, I think, could enter into the marketplace if the marketplace gets spooked by a sudden move to the downside. What I mean by this is it's about a 20% of retail investors that have invested, substantial amounts of money, $400 to about, probably around $100,000 to $200,000 worth of Bitcoin, right in that kind of sweet spot. I think there's about 3 million Bitcoin that could come into the market and just flood the market with excess BTC. It's a pretty substantial amount when we start thinking about the number of wallets that hold just 10% of Bitcoin, the number of wallets that hold just 1 Bitcoin. And if you just saw a 20% sell-off from retail investors, just 20%, we're going to see a lot of Bitcoin flood the market, which essentially will drag the price of BTC to the downside. So as we kind of come back into our price chart, I think it's important that we reflect on the on-chain metrics, not really giving us that idea that we're in a bullish market. We're seeing a lot of, or a lack of interest, I should say, of larger investors in backing the price action to the upside. We see a lot of selling pressure from 10,000 Bitcoin or more wallet holders or Bitcoin holders. And ultimately, who's holding the bags at this point? are the most vulnerable investors, the ones who are going to need to be kind of cashing out. And if we start to see a small bit of selling pressure here, yeah, I bet capitulation is just around the corner. Guys, I'm going to leave the video right there. It's a bit of an update as to kind of where I think things are heading at a macro level. If you found it useful, and smash that like button. If you're new, subscribe, join us down in Discord, and let me know your thoughts in the comments below. Until the next one though, guys, have a fantastic day.